Hello everyone, welcome to ACCA Taxation Lectures relevant for Finance Act 2017. In this lecture we are going to look at the trading profits, and there are some adjustments which needed to be made. We know we have studied accounting at this level. You might have studied F3, you will have studied F7, P2. If you're watching this lecture for P6 purposes, then definitely you have passed, or you are going to attempt P2 as well. So regardless of your background, even if you are from the degree background, you will have studied accounting there. Now when we make the accounting profits, so we for the income tax purposes, if we see, so we will take the the revenue, then we will deduct the costs out of that. So there will be different costs, then it will be our gross profit. Out of the gross profits, there will be other expenses, so there will be lots and lots of expenses which we deduct, and eventually we reach at a net profit figure. Right, so that's how we calculate the income tax. That's how we calculate the income statement, right, or the profit and loss account. So there will be a revenue, then will be costs, and after the cost there will be different kinds of costs which will reach us the gross profit, and out of the gross profits we will deduct some other expenses as well, which will eventually give us the net profit figure. That is the accounting way of doing the calculating the accounting profit, right? So that will be our accounting profit. The net profit will be our accounting profit, but we do not have to pay tax on the accounting profit. We have to pay the tax on the taxable profit, right? Now taxable profit will be a little different. So how to calculate the taxable profit? What we do is we will take the accounting profit, which will be our net profit, net income. So we'll take our accounting profit and then we will do few adjustments to it. How will we do few adjustments? Because for accounting purposes there will be few deductions which taxable authorities does not allow. So we will add them expenses. So say for example, if there are few expenses deducted in our accounting profit which HMRC does not allow for tax purposes, so we will add them back. Right? So that will be the adjustments. Likewise, there are few expenses for tax purposes which should be deducted, which HMRC says you should deduct. However, they are not deducted for accounting purposes. So we will deduct them expenses. Likewise, there are few income which for HM revenue and custom purposes, they say that it should not be in the income it should not be included in the income. So them income will be omitted, so it will be deducted. Likewise, there will be few income which are not listed there, so we will add them income for our tax purposes. So there are four kinds of adjustments, like I've told you. So there will be few expenses which needs to be deducted, there are few expenses which should be added. Likewise, there are income as well, so there are some types of income which are not there which we should add, and some are which are added which should not be there, so we will deduct them. Right, so these are our trading profits, and there are a few adjustments as well. Now I'm going to share the video screen with you. This video lecture is exactly the same for F6 taxation and for P6 taxation. So I'm recording one single lecture for both of the F6 and P6 students. The stuff which we are going to see now, the lecture notes, I am following the F6 lecture notes. For P6 students, you will find the same stuff in your P6 notes as well. For F6, there is chapter number 7. For P6 students, it is chapter number 6 in your P6 notes. Right? However, material is exactly the same for P6 and F6 students. Although I will be studying the F6 notes, and after finishing this lecture, you can go and read your own lectures, whether you are an F6 student or the P6 student.
What are these expenses?
Right? I'm just going to share the video screen with you.
There will be fines and penalties, depreciation, amortization.
So as you can see on your screen,
or for any other purposes,
trading profit adjustments. Right. So illustrative format. So we'll take net profit for net profit before tax as per accounts, and we will add expenditure
Right.
charged in accounts
So
which are
what
not
these?
deductible.
These are the expenses
Expenditure which are
deducted
charged in
accounts,
accounts,
but
as I
which
said,
for tax
expenses which are
purposes should not
deducted
have
from the
been
accounts
deducted.
which should not
So
have
we
been
will
deducted.
add them. So
Now
we
what
will
are
add
those
expenditure
expenses?
charged in
Now the
accounts
list
which
is given
are
below.
not deductible.
So it says the expenditure charged
Now
in
the second
accounts which
ones
are
are
not
the
deductible
income
or not
not charged in
allowable.
accounts which are
So what are
taxable.
these expenses?
So
There is a huge
it
list
is
of the
not added
expenses.
in our accounting
So
profit.
there will be
So
fines
we
and
will add
penalties,
this because it is
depreciation,
taxable. So what is
amortization,
that?
general
Drawings
provision
of
for
stock
bad debts
and
or
assets
for any
by
other purposes,
proprietor.
bad debts not related to trade, capital expenditure, fee incurred recurring new assets, and the list goes on and on. If you have any questions with regards to that, you can just drop me an email. However, it is just a self-study stuff. There isn't any technical thing.
Right, it will be added for the tax purposes.
Right. So what are these? These are the expenses which are deducted in accounts, but which for tax purposes should not have been deducted. So we will add them. So we will add expenditure charged in accounts which are not deductible.
So we will deduct the
Now the second ones are the income not charged in accounts which are taxable. So it is not added in our accounting profit. So we will add it because it is taxable. So what is that? Drawings of stock and assets by proprietor at its market value. So if you have taken anything for your personal use that is not included in our taxable, in our accounting profit, so we will add that. So drawing of stock and assets by the proprietor at the market value. Right, so it will be added for the tax purposes. So we will add that. Now the third thing is income or profit which are not profits. Right? So we will deduct the income or the profit which is included for our accounting purposes, however, which are not trading profits, so we will deduct that. So for tax purposes, we don't have to pay tax on that.
Right.
So
what the last one is in this
profit or
list
sale of capital assets,
not charged in the account, which are deductible,
which is capital gains tax. And rental income
not
from property,
in our accounting profit,
premium received on grant of lease, interest received, and dividend received. So all of them are written in brackets that where all of these will be taxed. So why are we deducting all of these? Because it will not be taxed under the trading income. However, it will be taxed either in the capital gains, property income, interest income, or the dividend income. Right? So it is mentioned in the brackets. So we will deduct all of these incomes or profit, which is not trading profit, because we are only calculating the trading profit. So it will be taxed in the different sections. Right, and the last one is in this list is we will deduct the expenditure not charged in the account which are deductible. So there are few expenses which are not deducted in our accounting profit. However, we should deduct for our taxable profit purposes.
And in the note it says any expenses not in the above list must be ignored as they are.
Now we have added the accounting depreciation because for tax purposes there is different kinds of depreciation which is known as capital allowances. Alright? Now capital allowance we will see in our coming lectures. So capital allowance simply means a depreciation for tax purposes. So in our accounting we study depreciation, in our tax we study capital allowance. Alright? So that's why we have added back the depreciation. For our accounting purposes we have deducted the depreciation. But tax authority said no, you can't deduct depreciation, so add back. So we have added back depreciation. Right? Likewise, so for our tax purposes, tax authorities say that you should deduct the capital allowances. So that's why we have deducted. The capital allowances. In the case, not they are available. And if you see any expenses which are not included in the accounts, they must be deducted. Sometimes examiner gives few expenses which are not listed, which are not included in the accounts, so you must deduct them as well. Right. So that's the end of this video lecture. There isn't anything else in it. So it was a short lecture. It is exactly the same for F6 and P6 students. For F6 student, it is very, very important. You can see it in exam. For P6 purposes, it's not as important as it is in the F6. Right? So I will see you in the next video, and we will continue with our P6 and F6. I will see you in the next video lecture. Goodbye.